Coming up today, the main indices fall lower again after Nvidia falls 10%. I'll break down the Middle East situation for you. The Fed caught in the middle. Citadel calls Trump media CEO a loser, and I'll show you what's working in this market right now. Hey, what's up guys? Welcome back to the Click Capital channel on this most interesting OPEX Friday. That's the third Friday of every month, when we've got regular monthly options expiry, and we got some wild moves out there today. Firstly, let me just quickly start off by welcoming all the new subscribers to this channel. I've had a lot of new subscribers this week, and just a quick introduction for those of you who don't know me. My name's Jared. I proudly bring you these daily reviews from deep in the mountains in the South Island of New Zealand, where I base myself. Prior to that, I used to live in Australia and worked for a large investment bank before I decided the corporate world is not for me. And so for those of you who haven't already, hit that subscribe button and I'll keep you updated every day on all the important news and events happening across financial markets. And thanks to all my regular subscribers who hit that like button every day. You really do help out this channel, and your support is much appreciated. All right, let's dive right into it. First off, I'll give you a little bit of market color. Actually got a massive rotation underway in this market into defensive sectors, utilities, staples, healthcare, also financials. Whilst we saw a massive rotation out of some growth sectors today, led by semis. First off, just looking at the S&P 500, looks like we've lost that big psychological level of 5,000 I've been talking about. I'm now looking for the next level of support at 49.20, where we've previously turned before. However, the market is continuing to look a little technically oversold here in the short term, not only in the S&P 500, but also in the small caps, Russell 2000. Starting to get some reversal signals firing off here. But the big technical move today was in the Magnificent 7. As a group, down 5% on a downward momentum thrust on huge volume. Even though looking at market breadth, most stocks actually turned up today. Looking at the percentage of stocks above their 20-day average appears to be turning off this low we just had a couple of days ago. There's a look at the worst performing sector today, semiconductors, down 4.5% on a momentum downward thrust signal on volume. And I'm going to get into that in a bit soon, showing you supermicro computer off 23%, ARM off 16.9%, and the big fella, Nvidia, off 10%, its biggest down move in quite some time. This is a big change in this market for what had been the strongest leading sector, and that has spilled over to the overall tech sector as a whole, getting sold off really hard here. And some of these growth sectors starting to look technically oversold as well. Consumer discretionary, really stretched here, and just looking at defensive sectors like consumer staples and utilities, actually catching a strong bid now for the third day in a row. And what a divergence there's been in the factors. Growth factor, momentum off 2.5%, low volatility stocks, and dividend paying stocks trading up really strongly here today, along with some continued strong moves in financials. Another upward momentum thrust in Wells Fargo today on really good volume, breaking out to 52-week highs. Good day for Bank of America, and a nice pop on JP Morgan, up 2.5%. After I gave you guys that swing trade idea yesterday, it appears to be catching up to its financial peers. And so far, so good for this trade. We're looking for it to come back and tap the 50-day VWAP here in the yellow line, currently at 190.62. And so what I do with swing trades is I leave a resting target order at the 50-day VWAP, and then each day after market close, I just update that resting limit order to whatever the 50-day VWAP is. So whether I'm in front of my trading screen or not, the order will fill. And just to give you an update on some of the spread trades I've shared with you guys over the last couple of weeks, some of which have been working really well this week, and that can often happen in times of heightened volatility with the market pulling back. The first one's long ITA short jets. It's actually experienced a bit of weakness as we had some surprise earnings come out of a few of the airlines, helping to lift the entire sector. We're now back down to support here. However, doing a lot better has been long GM, short Tesla. Doing the best has been long the Bitcoin Trust, short MicroStrategy, now up over 50% off the lows. Breaking out today was long Nvidia, short Supermicro, along with the other spread trade. I've been playing long semis, short ARM. Huge rotation today in value stocks out of growth. That spread broke out. Same with value versus momentum stocks. China versus Japan's been working well. And just to share with you guys some other swing trades I've currently got on my watch list. Kinross Gold, obviously the commodity sector, still on fire here. Silvercrest Metals having a good day. And some others like Aris Mining, really strong momentum tear on home building stock, Comstock. Sea Energy Maritime. Shippers are starting to look good, along with a few aerospace stocks like RTX, also holding onto their strong uptrends here. And so that's what's currently working in this market. But before I get back into stocks, let me give you a quick update on the situation in the Middle East. So I'm sure you all heard around 9 p.m. Eastern Standard Time last night, we heard breaking news of Israel firing back to Iran responding to their attack from last weekend, in which we knew they were going to do something. They had to do something, and it appears Israel have pulled off a surgical strike and really achieved their objectives here, and may have actually dialed it down and paved the way for potentially a window of de-escalation as they strike near the city of Isfahan, about 300 miles south of the capital Tehran, and really close to Iran's nuclear site, and what appears to be a really well thought out response. After the Iranians sent 350 missiles and rockets towards Israel last weekend, to which they're all pretty much shot down, they didn't achieve their objective of taking out any military targets. Israel showed the Middle East, and the rest of the world for that matter as well, the defensive capabilities of the US-led Western alliance, and in response showed Iran that if they wanted to, they could take out their nuclear sites, but they didn't. Their missiles got through, and the Iranians and the Israelis so far haven't even officially come out and confirmed it, as I'm currently speaking. So in other words, the Israelis gave the Iranians a chance to de-escalate, downplay it, make up lies that they shot them down, nothing happened, etc., etc. But showing the Iranians to stop messing around with them, because when it comes to it, the Western-backed Israel could easily beat the Iranians in a full-out war, because the Iranians would have a hard time attacking Israel, even if they wanted to, while Israel can easily flatten Iranian military targets if they wanted to. The Israelis also conducted this around 5 a.m. on the Iranian Supreme Leader's birthday, in which he would have got woken up to the news of the Israelis striking some targets. And so whilst it was happening in real time, we all didn't know how bad it was going to escalate. With the Iranians, we're going to start firing back. Now it appears for now we've backed away from the edge. Still not completely out of the woods. Iran could still come back and want to dial it up. However, they must know that's not going to work for them. As the Israelis have shown, they will bite back if they're pushed into a corner. And so it appears we've avoided the worst for now. And we can see that in how markets responded. Here's the S&P 500 futures. 9 p.m. last night, we were down about 1.5% after hours in short order. Bounced back pretty hard. Same with the flight to safety into US government bonds. And gold shot up, quickly retraced, as did crude oil, shot up to $85 a barrel. And now we know why the Biden administration earlier this week had come out and started hinting to the market that they're going to release oil out of the Strategic Petroleum Reserve. Because I'd say they had a pretty good heads up at what Israel was going to do, and they were worried about a further spike in the oil market. So they actually managed to talk down the price of oil going into the attack. And so the effect of it was pretty shortly lived and muted, and the markets leaned against that rhetoric again, and we're pretty much right back down to where we started before it. Same with the liquidity risk on proxy known as Bitcoin. That sold off really hard on the breaking news of the attack, getting below 60,000 again, put in a double bottom, and the market bought the dip, and we've traded right back up. Same as the other assets, right where we were before the attack. And there's a look at the daily chart on crude oil futures, that big spike and a little spike on gold, but still kind of sitting up there. Same with silver, pressing up against this big resistance zone. And agricultural commodities, again, breaking out, up 2.2% today. Believe it or not, another big move higher for cocoa, up 5.8%, and a little bit of an uptick in wheat, looking to hold above its 50-day here, and corn starting to tick up as well. These two important agricultural commodities have been weak for some time, and combined together, they make up about a third of the world's calories. And so they've been helping to keep food inflation somewhat tame, or a lot less worse than what it could be. However, if they were to join their other ag commodity peers, like the overall index, then the price of our food's going to go up a lot in the coming months and likely take inflation with it. And there's a look at the fear index VIX. Got a massive gap up to 21.3. Our option dealers, institutions stepped in and took advantage of all those juicy premiums and sold it right off all day. Still finishing quite elevated here at 18.7. And I'd say if we don't see any more further dialed up escalations in the Middle East over the coming week or two, we may trickle down to 16, 15. However, I'd expect us to find a floor around the high 14s, 15 here, as the market would have to price in still a real possibility that something else could happen over there, even though for now things kind of look okay. And just looking back in history, of 5 of the most biggest and recent geopolitical situations, looking at the performance of the S&P, it's actually been a buy the dip opportunity, as the market can see the situation coming, gets really worried, causes a dip, a spike in fear, and then looking back at the Vietnam War, the Gulf War, Afghanistan War, Iraq War, Crimean crisis, from the point of the invasion, the market actually rose in the months following that. So it's not all bad news for the stock market, and it's probably even better news for commodities. So that's geopolitics, commodities. But like I said earlier in this video, the big move today was out of semis, led by Supermicro Computer, crashing 23% after it didn't pre-announce earnings like they did last year. Said they're going to release their third quarter earnings on April 30, but sometimes companies will pre-announce when the results are significantly above Wall Street estimates, and that seemed to have spooked the market a bit here today. Maybe it's starting to think they're not going to come out with a good result, and that spilled over well into the semi sector and the entire tech market at large, with Nvidia actually shedding almost 300 billion in market cap just this week, and collectively the Mag 7 almost lost $1 trillion in market cap this week. That's a huge pullback, and like we've been seeing recently, a lot of these big tech companies are coming out and working more and more on developing their own AI chips. The government's trying to get behind Intel and others to reshore chip production. Nvidia still largely relies on Taiwan Semi. They've got the China risk there. And so Nvidia definitely won the first round in AI, and they're still head and shoulders above others. It's unlikely to change anytime soon, but the competition is most definitely on the way. And the huge AI chip spend by these big large tech companies like Meta and so on may not be repeated next year, as they've already built out their hardware and infrastructure required and looking to increase that with their own hardware and stop paying Nvidia's exuberant prices, which, like we know from history, 90% gross product margins never last because you're just waving the big white flag, inviting everyone else into the market. On top of that, we got a really sour response to Netflix earnings yesterday. Even though they beat numbers, pretty decent quarter, still expecting growth above 10% this year, they decided to go dark on reporting their new subscriber numbers. Market may be worried that's management thinking their model's maturing and their days of 20-30% growth may be behind them. And if that's the case, maybe Netflix doesn't deserve its price to earnings multiple of 42. Market sold them off 9% today on heavy volume, and my stock fair value indicator has it at $335 a share, and we're still 65% above that here at $550. And so all in all, finishing the week, the Nasdaq logged its worst performance since 2022, after it was the clear winner last year, and to start this year off, went on an absolute tear, pretty much done a U-turn here, and for over a month now, the market's been rotating into commodities, energy, and just recently this week, into defensive sectors. And just look at that red candle for super microcomputer, 23%. AMD had already been weak, down 5.4% today. Intel looks to be forming a teardrop pattern on the chart and is walking the line lower here. Not good price action at all. Previously hot stock from this year, British chipmaker ARM Holdings, down over 30% just this week alone. And for the stock market's third largest company, Nvidia, to come off 10%, that's pretty significant. And that's likely really damaging to this uptrend, and what's likely attracted a load of hot money, trend followers, hardcore AI believers, so on and so forth, could be rushing to hit the exit doors here. And going into next week, if not the weakening of the trend, could mean months of consolidation in a large range, as we've been trending for some time, and all markets oscillate from trending to ranging. Even spilled over into Meta, down 4% today, and Tesla looks to be walking the line lower as well. Off again, down almost 2%, and we get to hear earnings from them next week. That'll be a real big one. Elon and his team will have the pressure on to come out and warm the market up, and maybe we can get a big green candle pop. If not, like recent earnings where they've disappointed, coming lower than expectations, we gap down significantly on those days, 9% and 12%. And just looking at the options market, they are pricing in an expected move of 9.7% when we hear from Tesla after the bell on Tuesday afternoon. Staying on the options market, was a relatively busy Friday even for OPEX. Huge 51 million contracts traded and almost equal calls and puts. And I'd say a big part of the tech sell-off this week is the changing expectations for the path of interest rates. Tech's a really sensitive sector to interest rates because you could think of tech stocks as long duration. The reason why they have their high multiples and valuations is because the market's pricing in high growth for many years, and what can affect that is higher interest rates for multiple reasons. A lot of those businesses use debt to grow, so their cost of debt goes up or doesn't go down as expected. And now we've got some in the market talking about the possibility of a Fed hike, which I think is very unlikely unless we got some really hot CPI prints in the next couple of months. Certainly possible, and would definitely blow away a lot of people in the market and what this narrative has been for quite some time now. However, the Fed is coming around to the new reality that progress on inflation has stalled, and they are most definitely on hold, at least for a good couple of months now. I'd say the earliest rate cut we could get would be in September. And don't be fooled, they really do want to go ahead with that. Even putting out reports saying there's risks to financial stability if interest rates stay high for longer, aka the US government cannot afford these rates to stay like this. They want to refinance a huge amount of debt as fiscal policy is out of control with government spending. That's why we've got billionaire investors like Ray Dalio. Says he owns gold to hedge the risk of debt and inflation crises. He's always been a proponent of having some gold in a portfolio. He lived through the 70s and knows that was the place to be in times of inflation. And with now more and more questions about the US dollar, and considering over a quarter of all US dollars out there have been created in the last 4 years, the world could be potentially reverting back to the longest standing global currency known as gold. And that has definitely been the case over this last month, looking at the spread between the largest gold ETF GLD and the S&P 500 ETF SPY. Looks to have gone parabolic, walking the line higher here on a big rotation. And same deal with commodities in general, looking at the commodity index ETF versus stocks. Looks to be a textbook technical walk up, momentum thrust higher, pull back, low volatility, low volume, thrust higher, pull back, higher again we go. Moving on to the hotly traded Trump media. Stock now rebounding 47% off lows after it had a huge sell-off after it IPO'd onto the market, which we heard yesterday, the company coming out and showing its shareholders how to block short sellers, not allow their shares to be lent out, making it really hard for hedge funds to target the business. With the Trump media CEO now alleging potential market manipulation, really pushing back on short sellers, trying to keep them at bay, and it hasn't gone unnoticed. One of the biggest short sellers on the street, billionaire Ken Griffin's firm, Citadel, and its CEO, calling Trump media CEO a loser, not liking their criticism of short selling, and likely upset they can't short the heck out of it, as it is clearly overvalued and a big fat target for short sellers, in tandem with all their media friends to spook the market. This is likely to remain a war between Wall Street short sellers in the media and Trump's loyal following, many of whom couldn't care less about valuation and have just bought the stock in support of Trump. And there's a look at the daily chart. Big bounce up after we got really technically oversold here, and this too could be on its way back to tag the 50-day VWAP. Moving on to economic data, was a really quiet week. We didn't get much out, just a few Fed speakers. Looking at the next week, we'll start off pretty quiet, get some global manufacturing PMIs on Tuesday, along with inflation data coming out of Australia. Going into Wednesday, durable goods orders from the States. Thursday, we'll get to see how well the US economy has been growing with GDP data. Then finishing out the week, the Fed's preferred inflation gauge, personal consumption expenditures index, with that expected to have grown 2.7% year over year. That's inflation data. We could get a move in the markets off that. And so far this week, Fed Fund futures pretty much keeping their pricing towards a Fed rate cut in September. With the fear and greed index dropping a little again today, finishing at 31. It's no real surprise with what's going on out there. And just looking at the 2-year bond yield finishing pretty much flat here, just under 5%, with the 10-year reclaiming that lost ground after that initial flight to safety on Israel's attack back on Iran. Market is developing a little bit of trend here. That's going to keep the pressure on growth stocks, tech stocks. Those bond yields keep marching higher. We did get a little bit of a bounce back in high yield bonds, trying to find their footing here. And Bitcoin holding ground at 64,000 a coin, as the halving is expected to happen some point in the next 24 to 48 hours. Another slide lower in clean energy. Really good opportunity for long-term investors in this space like me to add to our positions. And there's the spread of inflation expectations, pretty much looking like agricultural commodities actually, just marching higher. Continued volatility in the cannabis space. Also get to hear from Microsoft in 6 days. They've really come off from all-time highs. Same with Amazon. New lows again for Apple. Looks like we've just taken out that weekly support below 166. And my favorite of the bunch, Alphabet Google, still holding up the best. Bit of a bounce. And one of my latest picks, A-Mark Precious Metals, up almost 3% today. And some of these other hot stocks down big. DraftKings, Vertiv losing its 50, along with the crazy priced Wingstop coming off the boil a little bit. Another nice uptick for aerospace and defense contractors, and big move into defensives like food and beverage, Coca-Cola and Pepsi, Kraft Heinz, and like I said, financials trading really well here on the back of American Express earnings coming in better than expected. They too breaking out up 6.2%, and just really strong moves, and some of them like Wells breaking out 52-week highs on momentum and volume here. So another interesting week in financial markets. Ongoing geopolitical situation looks to have potentially been resolved for now, but by no means definitely completely over. Like I said, the Iranians must know that they're beat. They came out strong with their attack on Israel, 350 missiles and rockets. That's kind of unprecedented, but they were all shot down, and the Israelis did a localized attack right next to a nuclear site on the Supreme Leader's birthday, just letting them know we can get you back if we want. However, we're going to pull back and dial it down if you guys want to as well. Also, likely sending a signal to stop instructing their militant groups, the Houthis, Hamas, and Hezbollah, to stop attacking Israel like they have been for many, many years, as Iran want the Jews out of the Middle East. But the Jews are not going anywhere, because Israel is the only Jewish state and home for them in the world. However, with what's going on in commodities, that's likely keeping some upside pressure and inflation. Even though the Biden administration is pushing back on the price of oil. It's likely to keep that going sideways at least for a little while. However, we've got the bond market pushing up on yields. That's hurting big tech stocks and the main indices, S&P 500 and especially the Nasdaq here. However, we are getting a bit technically oversold. May look to put in a bottom next week, maybe a big hammer or doji candle, find its footing like the Russell 2000 has already done, a big hammer here. And we've already got a bounce back in the defensive sectors, financials and energy as well, and even blue chips, Dow Jones back above its 5-day moving average, along with high yield bonds. And no doubt we'll be watching semis next week to see how much follow through we get on this move. Certainly an unwinding of the momentum trade there. And finally, we'll be watching the S&P to see if it can find its support at 49.20 now that it's lost 5,000. And that's it for the daily market review. Thank you very much for tuning in and hitting that like button. You're welcome to share your thoughts and comments below this video, and come back to the Click Capital channel tomorrow where I've got another weekend special edition video for you guys. Other than that, enjoy your weekend and I'll speak to you again soon. Cheers.